Hello and welcome to this special live discussion about what the future holds for China's economy, brought to you by DW Business. To discuss the challenges facing Beijing now and in 2024, I'm joined by DW's resident China analyst, Clifford Kuhn. And Clifford, always great to be with you. Plenty to talk about on the Chinese economy, isn't there?
There always is, it's like inflation. There's also inflation of the discussion about the Chinese economy. The more important it becomes, the more there is to discuss, and the situation gets more and more complex all the time. More and more different challenges we're facing. So it's one of the big stories, big questions in the world.
Yeah, I think there'd been some hope at the start of the year that it would be a bit more of a settled year for the Chinese economy, but it hasn't worked out that way. Anyway, Clifford really knows his stuff, so this is a great opportunity to get your own questions about the state of China's economy answered. Do just pop them in the chat, and they may very well find their way onto this little screen in front of me, and I'll put them to Clifford myself. So, Clifford, let's start with what 2023 has been like before we start to look forward. It started with that surprise reopening of the Chinese economy. It was supposed to be a year of sort of recovery after the dramatic effects of the coronavirus pandemic. But how has it really turned out?
Well, I think the pandemic in China was very much a very singular experience in its own way, because it gave Xi Jinping an opportunity to entrench his power base, because he's just made himself the sole ruler of China. So he's able to bed that down without any interference from overseas, because China was effectively closed. And in that period, though, the economy really struggled. And I think now that we were thinking at the beginning of the year that things would open up again, that supply chains would start moving again. But it just seems that the whole world has changed in that time. We've had the Ukraine war, which has caused complications, for want of a better word, to put it mildly, with the relationship, particularly with the relationship between China and the rest of the world, because of its close relationship to Russia. And in recent weeks, then we've seen the situation in the Middle East and the Israel-Hamas war, which, while not directly related to it, it again has put China's global role globally on the stage, and that's had economic impacts as well. It's
reinforcing a schism, if it's not overstating it, that has opened up between the West and the rest including the likes of China, India, etc. Something that was a result of the Ukraine war, the particular opening up as people chose sides. But we've also found that, haven't we, with what's been happening in Israel and Gaza. But let's talk about how the West has been reacting to China over the past year. And a real characteristic move has been the US apparent almost complete decoupling from China. So much so they've just had this meeting where they've been trying to say, oh, we're not completely done with them. But just tell us what sort of an impact the very deliberate US attempt to disentangle itself from China are having on the Chinese economy.
Well, I think if we go back a few years to the original, it's interesting that Henry Kissinger just died, who was sort of the architect of the West relationship, of the US relationship with China, and I suppose overall the Western relationship to China. And it was always about engagement with China. It was always about the idea that if you build trade, that China will become a democracy, that it will become a liberal model like the West, and this was the way forward. This hasn't happened. And for a long time, the business sector was making so much money that they kind of ignored the fact that this wasn't happening. The noises were coming from the political side, but not from the business side. But now even the business side is realizing that the situation is, because of China's closed nature, because of the way the party is structured in terms of controlling the economy, this can make it difficult for business to happen. And so then people started talking about decoupling, which obviously was a debate for a while. Most people have moved away from the idea of decoupling from China. It's too important. It's 35% of global GDP growth in the last decade and a half, which is you can't suddenly decouple. But what people are talking about now is de-risking. And I think that's, they're looking more closely at relations with China. And this is where China is really, our relations with China are at a crossroads at the moment. But it's a crossroads with so many different roads, that the way things can go, so many different perspectives.
We should explore those different paths. But when we talk about de-risking, we should also talk about what those risks or perceived risks are. Presumably one of them is political. It's not wanting to become too entangled in the business of a country where the government has a fundamentally different ideology to that of the country in which you normally operate. That's one of the risks. But what are the economic risks that Western businesses perceive when working in China?
Well, I think it's interesting. If you go back to the political point, the point you make there about politics, I think what's been interesting about Ukraine is that it's shown that you can't separate politics and economics in a way, because there was, I think, a long belief that China has its political system which we don't like, but we can separate that from business. And what we've seen then is that it's had a huge impact on China's role. Suddenly, it's seen as possibly supplying weapons to Russia, which would be used in Ukraine. We've seen the US imposing things like control on the sale of microchips and anything that can be used with a weapons application. A lot of this has come out of essentially a political situation. So increasingly, the political and the geopolitical is playing a big role in the economic story. So I think this has forced a rethink on many levels in the EU, which for a long time had a much more accommodating approach to China, for example. It's also having to rethink and de-risk, as we were mentioning.
We are seeing it hurt China's bottom line as well, aren't we? They've posted their first ever deficit in foreign direct investment for, I think it was July to September, whatever, can't count to three all of a sudden, which basically means that foreign companies are taking out more money than they're putting in, which is bad news for Beijing. And is that something that they're... Well, firstly, do they see it as bad news? And if so, are they doing anything to fix it?
I think that's also a very important point. I mean, I think what we've seen is a political hardening within China. We've seen everything focused around Xi Jinping as leader, as general secretary of the party, which is his most important role. We've seen beefing up of the military. We've seen a more aggressive stance when it comes to China's neighbours. We've seen all of these things happening. And we've seen also the government playing a much bigger role in running the economy. The tech tycoons, for example, have been brought in. Jack Ma, the head of Alibaba, for example, made comments about the Chinese state banking system being inefficient, and he disappeared for a long time. We've seen numerous CEOs disappear. So clearly, the party is imposing its stamp on business.
Yeah,
which
it doesn't feel like a good time to be an entrepreneur.
No, it's not,
and it's not helping.
Exactly, and everything is so everything has become very ideological. For long periods in the 2000s, everyone felt that it was kind of open season when it came to the economy. That the government, it was never hands off, but it certainly didn't interfere as much. And now it's really interfering a lot, and I think that's really hit sentiment abroad. It used to be, for example, the Chinese model is that you have to be a junior partner in a joint venture with a Chinese company. That was fine as long as everyone was making money. Suddenly, if you're earning less money, foreign companies are starting asking questions, why are we doing this when we could go to India, or we can go to Indonesia, or we can go to Malaysia? All these kind of questions are being asked, and these are new. And I think this is one of the major challenges is this foreign investment thing, and getting people for a long time felt they couldn't get their money out, and so there's a lot of people are asking why do we put ourselves through this?
Clifford, stay with us. Just a quick reminder, if you have only just joined us, that we are discussing the state of China's economy and what 2024 potentially holds. And we're also taking your questions for our resident China analyst, Clifford Coonan, who's sitting here with me. I've just had a question from Brain Filter, not Brian Filter. It's an easy mistake to make. So what would be the impact of joblessness and potential decoupling of Western economies on China? So again, we're talking about this decoupling. How much does China need the rest of the world?
Yeah, this is a very interesting... I mean, this is one thing that works both ways. I mean, as the question... China is suffering at the moment from a big problem with youth unemployment. There's a lot of young people are failing to find jobs. They're coming out of universities, and this is a problem. At the same time, you've also got a shrinking youth population. So there's these two factors are coming together. So I think...
Yeah, I was just looking. Sorry, I just got some stats on that. China's workforce, it's shrinking. By the end of the decade, it's expected to be declining by 1% per year, which is obviously in pure figures a huge number for a population of 1.4 billion people.
Yeah, it's a lot. And what that does then is it increases the dependency ratio. So suddenly you've got fewer people working, taking care of older people. And demographers always talk about the to get rich before you get old. Because like in Japan has got a lot of old people, but it's also a very wealthy economy. So even though it's got a smaller workforce, they're better equipped to look after this aging population. And with China, it's always been a race for it to get rich before it got old. But because of things like the one-child policy, which was there, which restricted the number of births to one child per family for decades, combined with a general dropping of the birth rate within Asia. I mean, it's not just China that's experiencing this, but the replacement, the number of births are very, very low in China. And they need more births to be able to have a workforce to look after these people.
This is not a new problem.
It's not. No, this is
gradually loosening the number of children that people can have in China to address precisely this issue, right?
To the point now that China is now looking at ways of possibly trying to encourage people to have more births, and which, given that it's only 20 years since the one-child policy was very strictly enforced, you had sterilizations, you had all these kind of terrible situations, forced abortions, where suddenly now you've got the idea that they might do things like remove some of the restrictions. I mean, there's a lot of social conventions, for example, as a single woman, you can't have a child, for example, or well, you can, but you face a lot of obstacles, such as you won't get any state benefits and things like that. Right. They're talking that possibly single women will be allowed to have children outside of wedlock, as the old expression, outside of the civil partnership.
It's interesting. What we're talking about here is concessions, ultimately, and adapting. Is that going to be key to the Chinese economy managing to sustain the sort of growth that Beijing wants to sustain? It wants to average something like 5%, I think, per year over the next 15 years. They haven't set their... I understand they've actually just delayed their discussion about what their economic plans are for the next decade and a half, right?
That's right. I mean, you talk about concessions and adapting.
Yeah.
Very, very necessary. But there hasn't been, for decades, there hasn't been a Chinese government more opposed to concessions and adapting. What we're seeing is a return to very, very strong party control, which makes concessions and adapting extremely difficult. And to that view, we've had the third plenum, which is one of those, a meeting that takes place.
Lots of important people get together behind closed doors.
After the party congress, which every 5 years you have a plenum, this meeting, which basically discusses the economic aspects of this meeting of the senior ranks of the Communist Party. That always, it looks like that's being pushed to December, which is unprecedented. It may even be kicked into next year. The markets and China analysts are interpreting this as a possibility that they're kind of struggling at the moment to know what exactly to do with the problem, to how they face all these challenges, how they address these concessions and these ultimately the blanket word of reform. China needs to reform. How are they going to address reform?
That's interesting that you raised that issue. I've had a question from C. Booty. Apologies if I'm mispronouncing that. Are we not underestimating China's abilities to overcome problems? A problem with a culture rich in science, technology, and strict discipline. Yeah. China does appear to have been resilient to many of the problems that we've talked about over the past few years.
Well, the road is littered with the bodies of China watchers who predicted the end of the Chinese economy, and I wouldn't predict.
Is anyone predicting the end of the Chinese economy right now?
No, I think there's always been. I think the idea of a catastrophe, a catastrophic decline or collapse has always been oversold. Right. It's as the questioner points out, it's an extremely resilient economy with a lot of ability, incredible energy, and you don't want to generalize about a whole people, but there is an amazing entrepreneurial energy in China, and that we've seen in the last 30 years has produced this incredible story of growth. It's been when Chinese people have been allowed to do business in China, they have done it fantastically well, and so that's why I think calling the end of the Chinese economy. We've had various people calling it within the coming collapse of China, all these kind of things. But that doesn't mean that these people who make these predictions are necessarily wrong because of the structural issues. They're still there.
A lot of these morbid predictions for the Chinese economy, though, are based upon comparing the Chinese economy with itself, aren't they? For example, the levels of debt there, yes, they're higher than they're used to, but are still comparatively low, or at least within the, comparable with the United States and lower than Japan. There are other things that the Chinese economy still got going for it, right?
Yeah, I like the word morbid. Morbid, yeah, because that's
Moribund.
Yeah. No, it's so true. I've always find it fascinating the comparison story when it comes to China. We're always comparing to the US. I mean, they're just so different, these economies. On a very basic level, you can compare them, but you've had these forecasts that China's going to overtake the US. That completely, first of all, that misread the US economy, because the US economy has proven an incredible growth engine for the last few years, and it's now looking. The latest forecasts are that China will never overtake the US economy because it's now facing all these structural issues we're talking about.
The way it's been chasing the US economy, though, is amazing. Really, in 1990, China's GDP was like 7% of the US economy, and now it's over 70%, which is enormous. But it's not going to. Yeah,
it's probably
hit 100.
Unless there's a lot of this is actually probably because of demographics and because of the fact that there aren't enough young people to really drive it over that and the system is struggling. There's issues about government debt, local government debt in particular, and as well as the fact you've got the aging workforce, you've also got this problem with local government debt.
Yeah, that's absolutely what we should get into next. But I just want to put another question to you that we've received. This is from JJ. What would the potential effects be of the problems in the Chinese economy on the neighbouring countries such as India, Taiwan and the Philippines? So what are the broader implications for Asian economies?
Well, thank you, JJ. That's a great question, and I think it's
a broad array of different countries that are cited there as well. From India to Taiwan and Philippines, obviously all very different cases.
Yeah, I mean, if we maybe lump some of the countries together into the Southeast Asian bloc and then India, I think you've got two very different scenarios. The Indian economy is in some ways taking up a lot of the slack from what the drop off in China. Quite a lot has gone to India, and India is also
happy to take it.
Happy to take it, of course, because these are rivals and neighbours who don't get on in so many ways, and yet in other ways they have so much in common. And India, of course, has just overtaken China as the world's most populous nation. So in some ways, India is very well placed, I suppose, to take advantage of a slowdown in China or slower growth in China. Looking at the Southeast Asian countries, they've also been, a lot of them become very reliant on China. I don't think that's going to change. And particularly in places like Indonesia, Malaysia, they've very much hitched their wagon to China. But they also have a closeness to the US. And I think that's very important, that they still have the Philippines, for example, they still have these very, very important links to the US. So I think what they're going to be doing is trying to balance their position. It's a very, very difficult, because politically it's very difficult for these countries to do that, but they're going to have to balance the political situation, the geographical. I mean, ultimately, these are China's neighbours, whereas the US is a long way away. So, ultimately, you're more worried about the country that's just across the border. And that's going to be defining.
I mean, JJ has mentioned Taiwan there, which is obviously a very different case.
Taiwan is another angle again. I mean, this is another one of these. If we're talking about a crossroads, this is another road again. The U.S. closeness to Taiwan, the incredible success of the Taiwanese economy. People are loath to compare the People's Republic of China and Taiwan's economies, because Taiwan is small, you know, and China is, you know, it's 23 million versus 1.4 billion. But if you look at models, and ultimately scale is one thing, you know, but you know the numbers, ultimately the model should work for big and small, and Taiwan has been a great success. If anything happens in Taiwan geopolitically, that will cause a whole new economic picture, and we'll be back talking about this in a completely different context.
And one of the big questions of 2023 was whether or not problems in China's economy make an invasion of Taiwan more or less likely. We've heard a lot of arguments in either direction. Did any of those arguments particularly sway you?
Yeah, I mean, this is a very, very difficult one and to call, and in which case I'm not going to call it, because, you know, I think it's the safest. Because, well, it's just, I mean, you can see arguments for both sides. I mean, and you know, I do believe in I have an opinion on most things, but on this one, I think that a lot of it, what China is doing, is saber rattling, and Taiwan is a hugely important issue politically. But at the same time, I think Ukraine has changed the argument. I think where they've seen how Europe has backed Ukraine, how the US has backed Ukraine, and suddenly it's changed the whole debate about Taiwan.
It's interesting, isn't it? In the early days of the conflict in Ukraine, and just directly after Russia's invasion, there was a feeling that this would embolden China. But as Russia's becoming increasingly bogged down there, that argument has softened somewhat, hasn't it?
Yeah.
So to move back to something you were talking about before, because let's get back to sort of the Chinese economy, red in tooth and claw. The problems with local government and the funding of local government. Can you just explain to us why that's something we should be paying attention to?
Okay, well, maybe to tell a story about Shenzhen, the town of Shenzhen, the city of Shenzhen, which is just across the border from Hong Kong.
Super city, vast place.
Vast place at this point, and it's the centre of the Pearl River Delta. So there's cities like Zhuhai, Macau, Hong Kong, all of these cities that are in this particular area, and it's seen as one of the great Guangzhou in Guangdong province. It's seen as one of the great growth areas, areas of economic activity on the planet, and it is indeed that. When I first went there, it was very much back in the early 90s. There was just a road with houses on the side, and there were garages that were producing widgets, or you know, and they just opened the special economic zones. A gradual, very slow opening up of China after Deng Xiaoping's visit to the southern provinces, who was the former leader after Mao, who basically opened up the economy, is credited with opening up the economy. So we had that. Then suddenly Shenzhen started to take off, and it was, every time you'd go there, there would be new streets, new districts. I remember even much, much later arranging to meet people in districts that hadn't existed when I'd visited there 2 years previously. It was just, the levels of growth are very, very, they were phenomenal. And it was this construction where basically the local government sold the land, and it made a lot of money from selling the land to property developers. And there was just money, 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 and it spreads and spreads and spreads. So that's how the local government model works.
Right.
The local governments, but at a certain point you run out of land. Land is finite. So, and you've seen this all over China. You've seen this in every major city, all along the eastern seaboard. You've seen it, where now you're stuck with the local governments don't have any, they've lost a major source of their income.
Yeah, and this is all tied in with the problems in the Chinese real estate sector, obviously, because the model of funding local governments is so much involves the selling of land to real estate developers. Clifford, stay with us, because we've actually got a report that I want to play, and it's all about developments in the Chinese real estate sector. By the way, just a reminder that you're watching a live stream from DW Business, where we're discussing the state of the Chinese economy and what 2024 potentially holds for China. I'm here with Clifford Coonan, our resident China analyst, and if you've got any questions for them, do put them in the chat. They're popping up on this screen here, and I am giving them to him, so do keep those coming. But meanwhile, a Hong Kong court has once again given China's highly indebted real estate group, Evergrande, more time to organise a restructuring plan. So the court has postponed legal proceedings until January 29th of next year. It was supposed to be today. The real estate giant now has more time to gain backing for its restructuring plan. Last year, a creditor filed a winding down petition in Hong Kong against Evergrande, which would begin the process of liquidation. But the case has dragged on while parties tried to broker a deal out of court. So Evergrande's troubles have become a symbol of the property crisis.
With more than $300 billion in liabilities, Evergrande's debt woes have worried Chinese authorities, with the company teetering on the verge of collapse, threatening to bring China's economy crashing down with it. There's a lot at stake. Evergrande has 200,000 employees, several hundred residential and commercial projects in numerous cities, and until recently was one of the world's most valuable real estate companies. China's property market makes up a quarter of the economy, and it's not the only struggling developer. If Evergrande collapses, it could take other companies down with it. It's been a dramatic fall from grace. Trading in its shares were temporarily suspended, and the company's US arm filed for bankruptcy. Then in September, Evergrande founder Xu Jiayin was detained by police for unspecified crimes. Much of the billions left outstanding is owed to ordinary people who paid up front for apartments which now have little prospect of being finished. Falling property prices mean they're unlikely to get much back, if anything at all, of the money that they gave to what was one of the most trusted titans of China's booming construction industry.
Back to Clifford Coonan, our China analyst. Clifford, the Evergrande saga continues. Just remind us, though, of how important a company this is and what its decline represents in terms of China's property sector.
It's interesting, those pictures that we were just looking at, you know, these grey, unfinished buildings, these massive buildings that are standing there unfinished.
They're just a living metaphor, aren't they?
Right? They're just so evocative. And exactly, they are a living metaphor. And I think this is a sign of overextension, where basically so much of the economy is tied up in apartments. It's the only real way to save in China, because the stock market is kind of weird and you can't really get in. As a private investor, you can get in, but it's difficult. And there are very few vehicles for you to invest your money. And given that things like healthcare, education are all provided for, you have to pretty much provide for them yourself. A lot of these sort of things, they need to invest them somewhere, and they're constantly looking for outlets. And the way to do that has been in real estate for years. So the prices of real estate have gone up dramatically. And the other thing that's always important to remember about China in every aspect of economic activity, I find, is that it's from a standing start, basically. That's the thing which always used to amaze me in China. I mean, I remember once with a Chinese friend talking about buying a present for the family, and she was a young woman, 25, and she sort of said, "Well, when I was a kid, we got nothing, you know."
Yeah.
And you know, people have gone from literally having nothing to suddenly, you know. So this is, and real estate ties in.
They've got used to that, right? And that's what we talk about so often, or people who spend a lot of time talking about China. Talk about very often is this so-called social contract, which I know is something that you take issue with. It's not a contract that the Chinese people ever actually actively signed up to. But this idea that as long as the government was delivering improved lifestyles, improved wealth for Chinese people, they're willing to put up with a certain amount of, do you want to say oppression, but a certain amount of additional scrutiny, additional control from their government. But now, with so many Chinese households having their wealth wrapped up in a real estate sector that is in trouble, is there a danger that the government is going to lose that support and the Chinese people are not going to hold up their side of that bargain?
Yeah, I mean, I think that's you can talk about oppression in this, and I think if you look at the things like the social credit system, which is this system whereby you accumulate points if you breach, if you run up too much debt, if you break any financial rules.
How widespread is that system, by the way?
It's extremely widespread, and this week we've seen a report that there's a huge number of people have fallen foul of it, and people who have defaulted on the system. And because you're in this system, you can't. It's very difficult for you to operate. You can't do anything in China now without your WeChat, which is the social media, because all payments happen through through your phone app. So if you're excluded from that, you're excluded from pretty much all economic activity. So basically, yeah, I think that people are feeling that if they start feeling that they're being excluded from the economy, then they're going to ask why. And if the answer they come up with is because the government is being being oppressive, then they're going to start asking questions about that. So it becomes a stability issue as far as the party is concerned. But basically, there's a US historian, Stephen Kotkin, who talks about the difficulty of reform within a Leninist or within this form of communist government, is that you can't have a little bit of reform. It's very difficult to have a little bit of reform. I mean, the Chinese government is terrified of going the way of Russia, of going the way of the Soviet Union, where Gorbachev introduced reforms which ultimately led to the collapse of the Soviet Union. It can't go that route. So reform is extremely difficult for the Communist Party under Xi Jinping. So at the moment, it's asking all these kind of questions about what is it going to do in order to honour this the social contract is contention, but in order to stay in power, it needs to keep delivering the goods and the economy. But at a certain point, the questions become too big to be answered. Local government debt being one thing, there's huge indebtedness, so that if they can't provide the property needed, affordable property, if people can't afford anywhere to live, what's the point if you can't get married? I mean, we had a series, I don't know if you remember, a few years ago in Foxconn, which is the giant Taiwanese semiconductor plant in Shenzhen, near Shenzhen. There was a wave of suicides. A lot of those suicides were driven by people who just couldn't afford property, so you couldn't get married. What do you do?
So it's become entrenched in something that was not necessarily possible not that long ago, is now so entrenched in the culture. It's an expectation.
Exactly, like you say, people have gotten used to it. People got used to it immediately. I mean, the thing is, once you're given something like economic stake, you're not going to go back. You can't go back without questioning what is the point. And so if you take away hope and if you take away that kind of expectation, it becomes a major political issue, which translates into a stability issue.
Back to the real estate sector, though. So we've had Evergrande, and there's another company, who's Country Garden, right?
Country Garden,
who've both had problems, and there was a lot of talk about a bleak future for the real estate sector, possible collapse of the real estate sector. But is anyone still talking about that? Because it feels like it's gone a little bit quiet on that front. I mean, what sort of health is it? Has it turned out to be contagious? What's happened at Evergrande?
Well, I think the response was basically initially nothing, and what's happened is, and what the Communist Party's, the Chinese government's response to many things is often to just try and kick them down the road. If you stretch out a problem, you minimize a problem. There's a belief that the longer you wait, eventually the problem will go away, and they're hoping that general overall economic activity will sort of raise the waters and the boats will float. And I think, this has worked before, and in this particular case, there's a feeling that there needs to be reform of the property sector but as we've said, reform is extremely difficult. The main area of the problematic area has been from foreign investors. There's a very relatively small exposure of foreign investment in Evergrande, for example, but the foreign investors are not the priority when it comes to the Chinese government. Their focus is very much on the domestic market. They're quite happy, as we saw today, the Hong Kong court, which cancelled the Evergrande bankruptcy, has kicked it into
2 months down the line.
2 months down the line. Again, it's this process to stretch out the problem, I think. They don't really care about the foreign investors, but they are going to try in the meantime to find ways to deal with it. I mean, ultimately, people these apartments will fill up. It's just, it hasn't been the catastrophe that maybe people thought it would be, but it has exposed all kinds of structural issues with the problem. So it was never going to be one event. It was always going to be a series of events that are happening. And I think that's been happening. I mean, the economy isn't growing. There isn't the same impetus. Sorry, the economy is growing. The economy is not growing at the rate that it was because it's lacking impetus. You don't have the foreign investment coming in. All the factories making the widgets have moved to Vietnam. All of these things that really help boost the growth in the early days are missing. So China is now looking around for a new growth model. It's trying to make more, to have more high tech, all these kind of industries. But at the same time, it's hamstrung by the need to keep control of people and to keep control of the economy. And so it's really trying to balance so many different things right now.
I just want to take some comments that we've been getting. One from Dan, welterweight, who says China's economy is expected to grow by more than 5% this year, which would be almost 2 times the US, and all these Western mainstream media outlets, I think that means us, are saying that China's economy will collapse. Are we overstating the threat to China's economy when it's managing to post 5% growth this year?
Yeah, I mean, the economy is still growing, but the thing is, it's not that long ago that we talked about China needing 10% economic growth a year to maintain.
And they're still expected to need 5% to hit their target of doubling the size of the economy compared with 2020 by 2035.
Yeah.
Right. So even to the Chinese government, staying above 5% is necessary. So anything below that, which is what's forecast for next year, they don't see it as a good thing.
Absolutely. I mean, I think there is growth in the economy. I don't think anyone is disputing that. But the question is just how long it can go for, where that growth is affecting. Is there, for example, there's a growing income gap, which a lot of countries have to deal with. But in China, it's quite extreme between the eastern seaboard and the hinterland, for example. That hasn't really improved. That's a big structural issue that the Chinese government has to deal with. It's got all these problems. I mean, just by highlighting these problems is not falling into a mainstream media trope. I think it's important to point out.
I mean, China is a special case, right? And to compare the percentage growth that it has with the United States growth is comparing apples and oranges, right? It's not. They're not comparable economies. And you look at the history of them for the past 30 years, and it's not. You can't really take those two figures. I would say, and compare them and get anything particularly meaningful out of it. One of the things that's holding back the Chinese bounce back from the coronavirus pandemic is obviously that domestic demand hasn't bounced back in the way that had been hoped, and Chinese people don't appear to be spending as much as before the pandemic. Has that been attributed to anything in particular? Is there a change in behaviour?
Yeah, I mean, we were promised at the beginning of the year that the Chinese consumer was going to rescue everything by going out and shopping, and there were all kinds of... and we've seen it in some sectors. We've seen it in the electric vehicle sector, for example, that people have been buying a lot of electric vehicles because they've been given all kinds of subsidies, tax breaks and things like that to do it. But it hasn't really transformed into a broader consumption wave. I think part of it is maybe the traditional thing about the Chinese being conservative when it comes to spending and the need to save and put money aside, particularly in times of uncertainty. And I think there is uncertainty around. I think it makes you less likely to go out and buy luxury goods, for example. Even though lots of people are buying luxury goods, all the Western luxury goods are doing really well in China right now. But that's a particular sector of society, and it's not a broadly representative sector of society. So I think consumption hasn't really kicked off the way that the government was hoping, and that ultimately it's good for the global economy if the Chinese consumer starts spending money again. And a lot of that, I think, is just down to uncertainty, and maybe people just don't have the same sort of level of cash that they did. I mean, it's expanding, but it's not expanding at the wild rate that it was a decade ago.
If you just joined us recently, by the way, this is DW Business Special, looking at the state of China's economy and what 2024 potentially holds for it. We're taking your questions and putting them to our resident China analyst Clifford Coonan here, so do write them in the chat, and they are being passed to me, and I am putting them to Clifford when they sort of fit in with what we're discussing. Clifford, actually, I think it'd be a good time to just sort of go over the main challenges that are facing the Chinese economy and what we need to keep an eye on in 2024 when we try to measure how it's performing. What are the key things to hit?
Well, I think real estate, again, we're going to keep keeping an eye on real estate. That's going to be very, to see how that develops. If this idea of pulling out, extending the problem so that it minimises the problem, if that works. Most of the analysts don't think it will, that there's still some structural issues that need to be addressed, that ultimately China needs to take a hit. I think a lot of an important thing is that there is a feeling that China needs to take a hit somehow, that it can't just keep pushing aside its problems. That in Western economies, when there's a downturn, people absorb the shock and then they move on. But there isn't really a sense that China is absorbing the shock or dealing with it or introducing the necessary reforms that it needs to deal with it. And I think that's maybe what ultimately has people most worried, is the fact that there's no real sense that it's doing anything. Stimulus is all very well, but I mean, China has so many airports now. It's got so many roads. It's got all the infrastructure it can need. It's got high-speed trains all over the place. All these kind of things. It doesn't have the same infrastructure needs that it used to. A lot of what it needs are things like financial infrastructure. It needs the financial system needs to be reformed so that people can. They need pension reform so that people can have private pension plans on a much greater level. They need all these kind of reforms, and the health system needs to be reformed to free up to make hospital construction.
Is there any sign of any of this reform that you're talking about?
There are promises. There's a lot of promises, particularly on things like financial reform. But that involves, for example, if you want a pension fund, you want something like Allianz, like a German company, or one of the big US, or an investment fund like
Fidelity. Endorsement.
Yeah, I know. You're getting some free Allianz stuff.
Yeah.
No, for just as an example, a Western insurer, for example, you want that style of investment of pension product, for example, is kind of what a lot of Chinese consumers want. But at the moment, they're restricted largely to. I think Allianz are operating, and they've received a license to operate in China. But it's still very closed in those areas, and I think that area really needs to open up. I think if people. And that will get money moving. There's a problem that there is money in China, but it's just not moving at the moment because the structure is, it's kind of hardening up, and it needs to be loosened up in order that things can move again.
We've got a question here. It's a bit of a diversion away, but I just want to touch on it because other people will perhaps be wondering. It's from Alison Marlowe, who says, what's the current situation with the new serious respiratory illness in China? What would be its potential effects on the economy after strict COVID lockdowns? Now, the last thing we want to do is to spread any sort of mis or disinformation on what's happening in China. But what's your understanding of what is happening in China on this?
Well, this is an outbreak of a respiratory illness, which isn't COVID, and there's various versions about what's going on. Some people are very worried about it. It's again highlighted the thing. I mean, we were just talking about the health system. The fact that the health system isn't as advanced as it could be. I mean, they've made a lot of advances in the cities, but it still needs to deal with these. The hospitals are swamped with these. Some people say it's kind of a hangover from COVID, where basically people had built up various immunity, and then there's a year gap, and then suddenly the next normal flu wave or whatever has a really bad impact.
I think we experienced that. I personally and anecdotally, we experienced that ourselves in in Europe a year ago.
Absolutely, and this year again. We're seeing it in Europe too. Europe, we have better health facilities in Europe, and so it's less visible. But we've seen huge rates of absenteeism in companies, and. Talking to doctors recently, they're saying that they're expecting an even bigger flu wave this year.
In Europe or
in Europe? In Europe. So in China, it's a very interesting question because again, there's been some information, but the problem with COVID was I often felt that there wasn't enough information. And again, the problem with getting information out of China it hasn't gone away. And so it's a difficult question to answer because there are issues. And We have to see what economic impact that will have. I mean, it doesn't look at the moment like it's going to be as serious as COVID, or by a long shot. But these things, again, because we've been talking about all these different factors affecting the economy, it's another factor, and it's the pile of pennies. The harder, you just wonder if it's going to really push things, make things very difficult.
How seriously should we be taking it in a discussion about China's economy? I mean, is it something that is being, an eye is being kept on, or really is it? Yeah, we're not there yet.
Yeah, I think an eye is being kept on is a good way of putting it, because I think I certainly wouldn't try to minimise it, because I think one thing hopefully we've learned is to be hyper aware to reports of these outbreaks, China in particular.
And people are, right? People are now, and it's not going to help a country with slow domestic demand to have the prospect of a repeat of 2020.
Yeah, I mean, these things, even in the best of times and even pre-COVID, a bad flu season does sap demand, it does sap GDP, because people aren't at work and people are, the schools are closed or whatever, so it does have an impact on economic activity. But for the time being, definitely worth keeping an eye on, and it's an important question, I think.
Sort of getting to the point where we should start to round up. So let's talk a little bit briefly about what the next year is going to hold for China. And we talked about a crossroads, right? We said that China is at a crossroads where it's got to decide whether it sort of ploughs on with its current weakening relations with the West, or whether it does start to make adaptations, concessions that mean that it can start to draw other countries back into the fold that have been keeping it at arm's length just recently. Can you tell which direction it's going to take on that crossroads?
I think what's interesting this time is that we have seen concessions. We've seen removal of restrictions on foreign money being taken out of China, for example, in certain areas of China, particularly where you have a lot of foreign investment, which is they're trying to get foreign investment back in. The Chinese government is trying to get foreign investment back in. But on the other hand, and you've seen other concessions. We had President Xi meeting Joe Biden for the first time in a long time. Not much really came out of it, but the fact they meet at all is significant. Later this week, we have the EU-China holding their first summit in a long time, and we can certainly imagine that there will be some restrictions lifted there. We saw recently...
Yeah, just last week, visa restrictions lifted. I assume that's where you were about to go with that, because it's a significant thing. For example, Germany is one of the countries, France, Spain, Italy, the Netherlands, there are the EU countries that now people from there can travel to China on non-work visas, I believe, for up to 15 days. Yeah. That's a big change. Yeah. What's the reason for it?
Well, I think, again, it is trying to encourage more engagement with Europe in particular.
And China's been holding investment conferences as well, right?
Yeah. I think one thing about it is, of course, that Lithuania isn't on there, and there's a few other countries in the EU with which China has had issues before that are not on this list. And some people suspect that it might be actually trying to, again, drive a wedge within the EU, because it does like to deal with individual countries within the EU rather than deal with the EU as a bloc, because it finds it as a way to avoid it becoming like the US, where it has to deal with this huge organisation.
Is that a realistic claim, that this is an attempt to drive a wedge? I mean, what do you make of that?
I think it's had its issues with a lot of Central European states in particular who've been particularly pro-Taiwan, and China does use
economic... with Lithuania, right?
With Lithuania, it set up a Taiwan trade office in the capital. So you had. I think and we saw with Australia that China does use economic coercion to push its political message. This relates back to what we were saying, how difficult it is to separate the political and the economic at times. But I think that the EU-China thing is going to be a summit is going to be another example of China trying to encourage better relations. But a lot of it is going to come down to how much China, what kind of changes China can do, because there isn't any sign that the leadership is acting in any way differently. Yes. So on the one hand, there is a sense, it's almost like there's two things going on at once. Previously, you had concessions, and then you had one step forward, two steps back. But now you've got both things happening at the same time. So it's, in some ways, we haven't experienced, this is unprecedented, that we're having both hardening of approach at the same time we're seeing concessions. So I think a lot of it is going to depend how things unfold at this summit, how things unfold with US-China relations, whether who the next US president is. There's all these factors that are going to come into play.
Wow, yeah, that's something we really have got to pay attention to in 2024.
Yeah, so with all of these things, I think the Chinese economy, as I say, it's a very vibrant economy. Ultimately, there's been these, it's going to keep expanding, but it's still facing headwinds and nothing has really changed in terms of addressing those headwinds.
Okay, Clifford Coonan, our resident China analyst, thank you so much for fielding all of my many varied questions and also those of our viewers here on YouTube. Always great to have you. That is all from me and from our resident China watcher, Clifford Coonan. If you arrive late, you'll be able to rewatch the start of this right here. And also, if you've enjoyed it, why not share it with a friend? Thanks a lot for watching, and till we see you next, take care.